Hey guys, good morning. Good morning. I'm gonna see if I can have the girls help me be the host here, and we'll get started here in just a few minutes.
Hey,
Make host? Yeah.
yes.
Hey, just a couple more minutes, guys. We'll see if anybody else is gonna jump in, or we got any more coming in the classroom. Okay, guys, we'll go ahead and get started. Um, Good morning, everybody. This is Cliff Cox with CrossCountry Mortgage. I hope you guys are having a great week and your sales and everything are going great. Thank you for taking the time today to join the class that's going to be all about VA loans. And so, if many of you haven't done VA loans, or if you've done a bunch, all those kinds of things, today is going to be a great kind of refresher to kind of go over all the different ins and outs of VA loans, what's important, what things to kind of look at, what changes have taken place, and some things over the last few years that's been kind of unique and different, doing VA loans, because I've done so many of them, and I started way back in like 2002, and just kind of seeing the differences and the changes and the updates and everything, to now. I mean, it's truly a cool thing, and we're trying to keep these things to be a very positive outlook, because VA loans are great. I know, sometimes when you guys are out there, dealing with sellers and dealing with, homes that are maybe a little bit questionable in regards to repairs and, and things like that, VA loans, sometimes, those kinds of loans get frowned upon, like FHA, just due to, certain things getting called out, like the peeling paint, the handrails, the GFI outlets, things like that. But truly, when you're looking at this from the standpoint of a veteran, it's truly a remarkable loan and can put a lot of people in a great situation financially, for their families. I mean, there's just so many benefits, to having VA loans. And so I really try to, put the emphasis on that as well, when I go over all these details. So what I'm going to do is I'm going to share my screen. Okay, let's see. Make sure I've got, this should be what I need. Okay. All right. Well, first we're going to start with our updates. Okay. All right. Just real quick. Can everybody see my screen? Just give me a thumbs up or say, yep, Cliff, I'm good. Or Cliff, turn your computer off, something. Okay, I think I saw a little something in the chat. All right, thank you, thank you, thank you. Appreciate it, guys. Okay. All right, so to get started, what I wanted to do was just initially just kind of look at the what's new, like as of 2025. There were a couple of things that kind of happened towards the middle of last year, which I want to kind of touch on, especially when in regards to real estate and broker fees. I want to just make sure I brought this into 2025 too, since this was literally towards the end of last year. For the veterans in regards to real estate fees and how those and who can pay those. So, because those of you that are familiar with VA loans, also too, remember, where real estate fees couldn't be, paid by the buyer. There was a time where that kind of was the case, but no longer. So basically this was back in August. So I'm just going to read this out to you guys so you have the full understanding of it. So it says, today, the U.S. Department of Veteran Affairs announced that the eligible veterans, active duty service members, and surviving spouses with the VA guaranteed home loan benefit can pay now for certain real estate buyer and broker fees when purchasing a home beginning August of 2024. So this will help ensure veterans remain competitive and not disadvantaged on the home buying market due to changes that may result from a key class action suit, with the National Association of Realtors, which you guys all know about. So that is just a really good piece of information, because I know a lot of veterans didn't know this information yet, whether they're just, they're not looking at the market updates or just not, checking certain things online for VA loans. I've had a couple over the last, I would say probably 2 weeks, just ask me about that. Hey, is this something that, we can do to, because they didn't want to feel like their offer was that, wasn't going to be strong anymore because they can't pay anything in regards to real estate or broker fees. So they actually can. So this will definitely help them out and keep them right in the mix with all the other types of financings, that are out there. So you guys may have heard of this, happening last year, but for those of you that didn't, I just wanted to make sure and bring this up first before we even got into the bulk of the presentation, because this was just such a good update that we had in regards to the real estate broker fees, which you guys are paid. Okay. All right. And so now I'm going to scroll down to, if you can still see it, I should have probably enlarged it a little bit more, but the VA max loan size now in Ohio is all the way up to $806,500. So that's what's nice about this is they pretty much follow what conventionals, what Fannie and Freddie do for their max loan size before it gets into like the jumbo range. So this is just the standard, VA max loan limit size. So if a veteran has all of he or she's, entitlement and is able to do a VA loan and didn't have any type of negative loan or anything like that. Hey guys, they are able to use and go all the way up if they can qualify up to the $806,500 loan limit amount. So very cool. I remember back when the max loan amount for VA loans was like 405 and it has now doubled. So very, very cool. Great information, in regards to the loan size too. All right. And let me see if I can enlarge this a little bit more there we go. All right. Okay, guys, I wanted to make sure you guys can see this a little bit more clearly because I'm going to go over, the VA funding fee. Okay. So, one thing that I definitely wanted to go over today was just to get a good understanding of the percentages of what the VA funding fee is and what's that's all about. So on a VA loan, if you are a veteran and this is either your first time using your VA loan benefits, or if it's, you've had a subsequent use, which means you had a couple different VA loans, and you are under 25% the disability, chart based upon the VA, you will be required to pay a funding fee. But that is all based on, how much you are putting down as well. So it's not all about just for 100% financing. If you want to put a little bit of money down, it'll change what the amount of that's going to be needed. So here's a good example. I wanted to make sure and post this funding fee because this is really it's great and it's informative. So if we've got a veteran that is using he or she's VA benefits for the first time and they've gotten approved, everything is great. They're looking forward to buying their house and they don't get any disability or anything like that from the VA. Okay, so that means they're going to be required to pay the VA funding fee. So their very first time, and this is if they do 100% financing. Say they didn't want to put any money down. They're like, Cliff, we want to do 100% financing. Here's what we're looking at. Their VA funding fee is going to be based off of 2.3%. Okay, so whatever the loan amount is, that's what it's going to be based off of. So if it's, $200,000, times 2.3%, that's going to be the amount that gets put on top of their base loan amount. So if it's 200,000 and say the VA funding fee is 4,500 bucks, it'll now be, $200,450 or $4,500. Okay, because they can actually absolutely finance that in. Now, if you do have a veteran that wants to, possibly pay for that and they don't want to have that rolled in, they can absolutely do that. It just, they allow it to be financed in just to help out the buyer to not have extra cash, for closing. It's very similar to the like the FHA's mortgage insurance premium. Very kind of similar thing, but this fee just goes directly to the VA as opposed to FHA's. So but it's really nice to kind of see how it's tiered, because then if you've got a borrower that wants to put a little bit of money down, say they either had a house or they have a good amount that they want to put down and they want to put down at least 5%, then that drops their VA funding fee all the way down to 1.65% that will get financed in or brought to closing. So, and then obviously you can see on here 10% or more if they put at least 10% down. It doesn't matter if it's the first time or the second time they've used it. Their amount will be 1.4% as far as the VA funding fee. So any questions real quick on that? Because I know that can be a little bit confusing, but that's just kind of how we base some things on. And if you see a client that says, hey, even when you see their pre-approval letter and the purchase price is, 200,000, they're doing, 100% financing, and you see a loan amount of, 2,500 or 200,000, plus another 5,000 on top of that, that's what that's coming from. So you don't have to get confused, by that being there. Okay. Any questions? If there are, just jump in the chat or unmute and just say, hey, Cliff, could you go over that again? Or if you need anything, that I can absolutely update that. Okay. So this is good information. This was the initial 2025 updates that I wanted to make sure and touch base on. Okay. Okay. So all right, guys. All right. So now we're going to kind of get into the bulk of the VA loan presentation, just to kind of really go over exactly what it is. What are the other benefits? What is it really a benefit for the veterans and the spouses and things like that? So I wanted to make sure and kind of go over all of the details. Okay. All right, so what is a VA loan? A VA loan is a loan guarantee benefit provided by the U.S. Department of Veteran Affairs, part of the Servicemen's Readjustment Act of 1944, the GI Bill. If I'm sure probably a lot of you have heard of that, to help soldiers returning from the World War II and re-enter into civilian life. So for primary residence or streamlined refinances, which is the VA EARL, which is the interest rate reduction loan for your former primary residence. So one of the specific things for VA loans is that it is for primary residence only. They haven't really opened up the anything as far as like a second home or like an investment property, avenue yet. Who knows? Maybe they will, down the line. But at least, if you do have a VA loan and you do want to purchase another property, you can still, they're not going to make you pay it off as long as you lived in that property for at least a year. Same kind of, leeway with like FHA. You can keep that particular home under the VA loan, and you'll probably have to get another, like a conventional loan for your second home, something like that. They're not gonna, if you're buying another house, they're not gonna say, hey, you got to pay it back. But if you do want to get another VA loan, depending upon how much your VA benefits are and how much you have to be reinstated, and we'll get into that, you may have to sell. So, but we'll go over those things here in a little bit. Okay. And so for VA, for veterans and more. So VA loans are not just for veterans. That's what's nice too. These are for, here's the eligibility that includes the other people that can actually get them. So it's active duty service members as well. So you don't have to be a veteran that's, retired from the military or anything like that. So it's National Guard, reserve members, and qualified surviving spouses of veterans. And that one is probably a big one. I think this was back in probably 2023. It was odd, but I had probably I think I had like 5 loans that I did for surviving spouses of the veterans. And, they had lots of questions up front. They're like, is this something that we can even qualify for? What do we do about going about this? And I'm like, you absolutely can, because they thought that they were, didn't have an option. They didn't know if they could take advantage of the VA benefits, and they absolutely could. And, one of the things that I wanted to focus on in some of the teachings that I've done on the VA loans is specifically that.
And one thing I'm curious about, and this is a very specific, what about
Yeah.
if you have a surviving spouse
Uh-huh.
and they've gotten remarried?
Oh, yeah. That is a great question. So they would probably have to have that loan if the other person probably couldn't be on it. Yeah. Yeah, I would imagine. That's a great question. I can get an answer for you for that one just to make sure. Because, I guess that is very typical, a spouse, getting remarried. And so, I know as far as those benefits, for sure, it's if it was her, but if she does get remarried, I'll see what the VA, has in store for that. That's a good question. So those of you that didn't hear, the question, Mike asked if there was a situation where you had a surviving spouse that got remarried. Could they still use the VA benefits from her husband that had passed away? So that's a great question. So I'm going to make sure and get some information on that just so I have an idea of exactly what the right answers are, and I'll let you guys know that as well. So good question, Mike. Okay. Let me see if I can move this over a little bit so you guys can, it's not covering all the verbiage. Okay. But yes, as one of the main benefits, which I'm sure you guys heard a couple of times here, is it's 100% financing. So you can buy a home with 100% financing. There's not too many 100% financing options that are available. USDA, I think, is another option, but it has a lot of different qualifications that are different than what you can qualify for a VA loan. They have less of the overlays, and it doesn't matter the income, as long as you qualify and the residual income is met, you can get a VA loan if you meet those criteria. So it's nice to still have that as an option. Okay. And some of the outstanding advantages for VA loans. So there is no private mortgage insurance. Like I did mention, they do have the VA funding fee, which can be financed in or due at closing, but there is no monthly PMI on any VA loan. So 100% financing, 5% down. If you put in 10% down, 15% down, it does not matter. There is no monthly private mortgage insurance. And the VA funding fee can possibly be waived depending upon the veteran's disability amount. So like I think I touched on before, if they are 25% or more, based upon the VA saying that, hey, and we'll check this for them too, like even if they're not even aware, most of them are, but if not, when we order the veterans certificate of eligibility, it's called the COE, we order that. It'll say right on there that it'll tell them what branch of the military is, or they'll say what their entitlement is, like if they used any of their benefits before, or if any entitlement hasn't been reinstated. Like say, for instance, they had a property before and unfortunately something happened and maybe they had a foreclosure, until that's made right, their entire eligibility may not be reinstated yet. So, but all that information comes over on the certificate of eligibility that we order for every veteran. And on there, it'll say, yes, they are exempt from paying the VA funding fee due to their percentage of disability that they receive. So that way there's no question. We check on all that for them, even if they don't have that information. Okay. And some of the outstanding advantages as far as like closing costs and things like that. So this is what's great too. So the VA sets a 1% limit for the lender origination charge and prohibits any certain other fees. So if you've got lenders that are out there that are trying to charge 1% plus any other fees, you can't do that. So what we normally do is we always go also off of the lesser of the two, because we have our standard processing and underwriting fee. And then depending upon the loan size, so if the loan, say it's a $400,000 loan and 1% is like $4,000, obviously we're not going to charge them the 1%. We're going to go off of just what our processing and our underwriting fee is. That'll be it. That covers it from us. And if someone's trying to go over that, they can get into some serious trouble. So just to kind of let you know too, in regards to what the VA caps it at, it's 1% for the origination fee. Or less, which is how we handle it. And another big topic too is seller contributions, because this has always been a question too, because everybody seems to be a little bit different. You've got, conventional loans where you've got clients that are putting, 3 to 5% down. The max seller concessions is 3%. Okay. But if they put 10% down, then it bumps up to 6%. And then if they put, I think it's like 25% down, then it's up to 9% on conventional. For VA, it does not matter if they put 100% financing or put 20% down. The max they can get up to 4% of seller concessions from the seller. Okay, but what's nice about this is that this works a little bit different than like conventional types of financing and some others. Is the 4% funding fee? It can be applied towards that if they wanted to do that. Prepaids, which is paying their homeowners insurance or getting their escrow account set up. And this can also go towards debt payoff, which is really cool. So it's been quite a long time since I've had that one though, but this is probably back in 90. Well, no, I'm sorry. It was just before COVID. It was probably COVID was what, 2020. So it was like 2018. I think I had this deal where, the seller was contributed to 4%, but we had to pay off this credit card to make him qualify. Because I mean, it was literally that close. The minimum payment on that credit card was $120, but the balance was like, I don't know, $1,800. We used the seller concessions to pay off that debt, plus the rest was applied towards his cash to close, just to get him to qualify. It was pretty crazy, but it's just something that's unique that the VA allows to do. They allow seller concessions to go towards paying off debt, not just towards closing costs or prepaids. So very cool. Okay, and here we go. And outstanding advantages for VA loans. It says the benefit is reusable. So like I said, if you've got a client that has this, whether they're doing it for the first time or they bought a bunch of different properties using their VA loan benefits, they are reusable. It all depends on how much eligibility they have left. So here's a good example. I had a client before too that currently had a VA loan, but they wanted to purchase another one and use their VA benefits. Luckily, they were downsizing. So once they got their other house sold, we ended up doing like an interest rate reduction loan for it anyway, but they were still able to carry 2 VA loans based upon how much they had to put down and how much their eligibility was. Because in most cases, it's tough to have 2 VA loans at one time, or because they just don't have enough benefits. Because most of the times that I've seen clients use them, they had their VA loan for their starter house and they wanted to upgrade and get a much bigger house. They had to put down so much more money just to be able to carry 2 VA loans at one time. And that is just what the VA wanted to do in regards to, because they insure the loan. That's what the whole thing's all about. And they kind of just help with the risk. They said, okay, you can do that, but you're limited to X amount of dollars. And so everybody's is different depending upon the purchase price range and all that stuff. But that's one thing that we make sure that we do is we get all of them in the system. If the borrower currently has an outstanding VA loan and they want to use their benefits again, we see what the remaining entitlement is, run that through the calculation and say, hey, this is your max VA loan amount that you can have based upon what your current mortgage is. So if you've got X amount of dollars to put down, then the VA will insure it and allow you to close on a new loan. But I would say the norm, guys, honestly, is having just one VA loan at one time. So what's nice about this, though, is that their VA entitlement, it can get re-updated, and it gets redone basically almost instantly. So all the times that we have like a simultaneous close, because they know their house is going to be sold and their VA loan is going to be paid off and they're going to get their new one, they do those all day long. As long as they understand and know what the game plan is, we never have any issues with that. Okay. All right. Any questions at all before I move on? Anybody on Zoom? Everybody's good? Okay. Okay. All right, too. And then another part of what's so popular about VA loans is more outstanding advantages is competitive rates. VA loans and relatively FHA loans, their rates seem to be a little bit better than, conventional financing, just because they're insured. That's why they normally get a little bit better when it comes to, government insured types of financing, as opposed to, standard Fannie and Freddie loans. So, but as far as before January 1st, 2020, VA loans were subject to conforming loan limits. Now they're not. They have their own limits now, and based on what they want to do. And veterans using their loan benefits in high cost markets were affected. Loan limit waived with sufficient veteran loan entitlement, all those kinds of things. VA energy efficient mortgages available. This was kind of like what I touched base on when we had our last meeting, was the energy efficient types of mortgages. Now VA's even opening up to that now too, to be able to finance in, any type of energy efficient, appliances and things like that for the property, which is great.
Could you do like a generator? Could you finance that in?
You know what? I would.
It's a big thing now. Everybody wants a generator.
Yeah. I mean, I think if it makes its way on that approved list of energy efficient products, I can't see why it wouldn't. You know what I mean? Because it's all, what is it? The name of that, the rating of it, something star.
Energy Star?
Energy Star. Yes. If it's Energy Star grade, for my knowledge, I mean, I can't imagine why that would not be an eligible, appliance. Okay. All right. And shoot. This thing is kind of like, I move this thing to this bar. There we go. Okay. All right. And again, guys, just, some of the highlights, 100% financing, limited closing costs, no mortgage insurance, no loan limits in regards to what they mean in regards to Fannie and Freddie. VA sets their own competitive rates, everything on VA loans. Okay. Now, which is nice too for VA loans, is the VA Streamline Refinance. I know you guys, don't deal too much with refinances, but it's still good to have a basic knowledge of this particular product and the benefit for the veterans, because if you still have a client that purchases a home VA loans and with a VA loan, and interest rates are where they're at right now, but when they get lower, this is a very easy type of loan to do for them.
It's a great talking point.
Yeah.
just offering them information and keep that relationship going. It's not about trying to sell anything at that point in time.
Oh, for sure, for sure. And those are the clients that you'll have for life. You know, I mean, just giving that extra added, benefit for them as a resource to explain, hey, this is going to really help you. So in most cases, we may not even need an appraisal or credit underwriting. We refinance to lower the rate. We can refinance as a benefit to shorten the term to, like, say, a 30-year or a 15-year. It's VA to VA loans only, so that's why there's really no underwriting, and we can close these things like in like 9 days. It's unbelievable. So, and fees limited but not tangible. They have to, as long as they pass the net tangible benefit, their 36-month fee recoupment restrictions may apply. So if they wanted to finance in their closing costs, they could, especially if they're lowering their monthly payment and all those kinds of things to make sense. All those things get waived and they can just do it instantly. So this is what's kind of cool, and which is really similar to like the FHA streamline refinance, is that you can, but what's nice about the VA ones is that you can finance in the majority of your closing costs. With the streamlined FHA refinance, it gives you a max loan amount. So you can finance in some, but maybe not all of the closing costs. With the VA loans, you can. So that's what's kind of unique about that. But the benefit to borrower is always got to make sure that that's in place. So we're not just going to refinance a veteran's loan just to fake of getting another loan in there. It's got to make sense, and it's got to make sure that the benefit of the veteran is the top priority with the transaction being done. VA cash out refinances. These are nice too, because they follow along a different set of guidelines as opposed to conventional and FHA guidelines. You can pay off debt, improve your home. These are just some examples of doing a cash out with the VA loan. Pay for college, refinance from a non-VA loan to a VA loan. That's another thing. Like, say for instance, they had a conventional loan to purchase a property, and then they got their VA loan benefits all straightened out. Now they want to do a VA loan. Then they can actually refinance into a VA loan. It won't be a VA IRRRL, like an interest rate reduction loan, because that's VA to VA, but they can refinance into a VA loan if it makes even more sense for them. So just another, added value of what the VA can bring to the table in regards to if you qualify for it.
That's just basically a HELOC.
Yeah. Yep. I mean, you basically could. It'll still be a standard mortgage, but you mentioned HELOC. Is that what you mentioned? Yeah, it'll be a little bit different because this will be an actual fixed 30-rate mortgage, 30-year. Yeah, HELOC's more of like interest only kind of. Yeah, this will actually be with those kinds of terms. Yep. So good information. Okay, documents required for a VA loan. Okay, so in addition to the typical ID, income, asset, insurance documents, we'll need the following, which is what I mentioned before: the COE, the certificate of eligibility. If they do not have that, what we'll get is their DD-214 statement. Shows the statement of service, active duty, or equivalent to the reserves, National Guard. What's nice now too, guys, is that the VA actually has made it a little bit even easier for us to streamline getting a borrower certificate of eligibility. As long as we have the veteran's name and social security number, we can go through our VA secured portal, through CrossCountry, and order that for them. So, because before, we had to have the DD-214, we had to have certain documents signed by the borrower. This is years ago. This was probably back in like 2000. I would think 2006, we had to get so much more paperwork and some things just to get the veteran certificate of eligibility. But now they've streamlined that process for us now. So we don't even technically even need the DD-214 any longer in order to order that. But we do, see if they have a copy of it, just so we have it in the file for compliance purposes. And, if we would ever get audited, it's nice to make sure we have all the proper documentation in the file. All right. So yes, in the service to advice you deserve for trusted mortgage insurance is CrossCountry Mortgage, because we do not just VA loans, guys. We do pretty much every loan that's available, but I really wanted to showcase and focus on the VA loans today because it's just such a great loan, especially for the veterans. And like I mentioned earlier in the presentation, you know, VA loans I know are a little bit more scrutinized when it comes to sellers and offers and things like that. But truly, to help level the playing field now, they have started to kind of lighten up a little bit on, you know, the restrictions. I mean, they still want to make sure the property is safe and, you know, because if the government's going to insure it, it's got to be for the most part in tip-top shape. So there's nothing really they can do about the peeling paint or the GFCI outlets. All those kinds of things will need to be taken care of, but they have gotten a little bit better just to make things a little bit more easier, I should say, to obtain and to get an appraisal to come through. And one thing that I wanted to touch on too, guys, before we get everything done too, is the situation when it comes to VA appraisals. Now, I've gotten a lot of calls and, you know, just even some texts and emails about just questions about what VA appraisals and how that's all done and what the Tidewater situation is. And so those of you that either have heard of that term before or haven't heard of that term, I'm going to kind of go over that too, because it's really important to have a good understanding of what this is. Okay, so every lender that's out there, we order everything through the VA's in regards to the appraisals, I should say, through the VA's portal. Okay, so it's not like it's when our normal appraisals are ordered for a conventional financing. We don't, when we order everything through, you know, through Zap, we have Brandon to help with our appraisal management company, all that for standard appraisals. It's a whole different game when we're ordering it from VA loans. Everything has to go through VA's portal. They then send out a VA approved appraiser to wherever that area is to get the appraisal, you know, back to us. So it's just to kind of give you an idea, it's a little bit different game as opposed to the traditional route. And then what happens is if we get a VA appraisal in right away and there's no issues, that's great. And then but if they do tell us that, hey, we need some more comps to support the value, okay, that's when it's what they call it. I don't know how they got the name Tidewater, but they call it a Tidewater situation where you have 3 days to get them over approved, you know, sold comps that are probably the best that are within, you know, less than a mile, I would think, of the subject property. So that's what happens. They don't really they don't let us know what the value is or what they're coming at. They're like, hey, we need 3 comps to justify the value of the property. So that's when we reach out to you guys and let you know right away, be like, hey, the appraiser is asking for 3 comps, get those over, get your best 3 comps that you can get over. And, you know, sold comps are way better than listing comps. So all those kinds of information, then once those get in, we send those through the VA portal and that's it. And then we wait for the appraiser to get back to us.
Are you sending that to the listing agent or are you sending that to the buyer?
I do both. So yeah, work together because this is exactly. So yeah, I always try to do both. You know, I mean, it definitely goes to the listing agent, but you know, I work with mostly buyer's agents too. So I keep you guys in the loop on that to make sure that, hey, this is the situation. That way you may have a good conversation. So that way you're doing what's best for both sides, not just the seller. You know what I'm saying? So
How long do those typically take?
the
Appraisal
from start to finish.
They've been a little bit longer.
Yeah.
So
Yeah.
what's the time frame?
I mean, a typical VA appraisal normally takes, you know, from the time the order is accepted. Like say we put everything through the VA portal and they send us an email back says the order has been accepted. I would say it's probably 7 to 9 days is a typical turnaround for VA. Sometimes it's been longer, but that's typical.
And from whatever they actually go out to? Or
Yeah.
7 to 9, so
Mhm.
less than 2 weeks. Okay.
Yeah, less than 2 weeks is the typical norm for VA turn times.
Okay.
Yeah. In some cases, depending upon, and I'm not saying if it is a Tidewater situation, but if the appraiser, if you know he or she is either busy or is still trying to work on finding comps, you know what I mean? You know, it may take a little bit of time, but at least they know after that, like that, let's say 7-day mark, and they say, hey, we need more comps to justify the value, then that means, okay, we're approaching a value issue. Okay. So, but good question. Just for you guys, if you didn't hear that are online, 7 to 9 days is a typical turnaround time, I think, for VA loans. And if you ever have a Tidewater situation and it's with us, call me immediately. We'll get it figured out and try to get it, squared away. But that's what that is. And you only get one shot at it. So it's a little bit different with everybody else. So you got one shot to get that value in, and then they finish it. Okay. All right. So that's the majority of information that I wanted to kind of go over today, guys, was about the VA loans. Is the main thing, that we touched on earlier on is being able to have the veteran pay for your real estate services, because before, they weren't able to do so, but now they can. So that kind of helps open things up, for you guys, that they can, help pay for their own real estate fees. And that doesn't all have to come from the seller, so that's a big topic. The VA funding fees, what it is, who's responsible for paying that? Do they have to, finance it in? All those kinds of things. All good information to kind of know, especially if the veteran is disabled, because that could really, change them from getting approved to not approved as well too. And honestly, another main point when it comes to VA loans too, guys, is the main thing what a lender is going to look at when you have a VA approved buyer. It's not necessarily the credit score. It's not necessarily the debt to income ratio overall. It's the residual income amount that they have after everything is paid. Okay, so say for instance, you've got a veteran that is wanted to purchase a house. They've got a car payment, credit card payment. They have their kids in daycare, all those kinds of things. So we factor in, okay, here is what you have, X amount of dollars of gross income per month. Okay. Then you have your car, your student loans, your credit card, childcare in one bucket, then the payment in another bucket. Okay. So what they'll do is they'll look at all of that. And then once you subtract that from your gross income, there's a certain percentage that they look at. If it's over, say, if you have over like 40% of residual income, that's good. Okay, that means you've got a lot of extra money to spend after all of your initial bills are paid. That's really the biggest thing when it comes to VA, because I've gotten VA loans approved with buyers with a 600 credit score, you know what I mean, with still a good rate because they can qualify for the program. They had a good amount of residual income. They don't have to have a 700 credit score every time, So that's one of the biggest things that the VA truly counts on. And what's nice too is that VA does allow for manual underwrites, very similar to, like FHA manual underwriting. If they can qualify, if they meet the criteria for a manual underwrite, the VA will sign off on it. Now, some of the requirements for a manual VA underwrite, they look at whatever their current situation is. Like if they're renting, they're like, okay, well, let's take a look at a 12 to 24 month, rental history. Do they have you made your rent payments on time? Can we verify this with canceled checks or bank statements showing that, hey, Bob has made his mortgage, his rental payment each month on time every month? Those kinds of things. Compensating factors, any kind of reserve requirements. So say they had some reserves, they had, maybe 2 or 3 months reserves in the bank on top of the money that they're going to use for their closing costs since they were doing 100% financing. All those kinds of things can be a compensating factor, to help them get approved for a manual underwrite VA loan. So that's what's nice too about these. It gives us an extra chance to get them done. So as long as it's what they call a refer eligible, that means, okay, they do meet the criteria, but it's not enough to get an automated approval in the system. So we're going to have to get this in front of a VA approved underwriter to sign off and make sure that we're meeting all the criteria. If you get, it's what they call a refer with caution, then that means, okay, there's really not, we're going to have to figure out what's causing this. Is it truly just a credit issue? Is there outstanding collections or judgments on the report that are causing it to not, get us at least a refer eligible? That's when we go to work on credit repair and getting things fixed up and getting them into a situation so they are going to be able to buy, at some point. So that's really the biggest thing. But VA manual underwrites are definitely a thing that we can do. And if we need to go that route, but as long as they meet the criteria, we can absolutely do it. I think we can even go down to a 580 score. If they had a 580 or higher score, and they meet all the other requirements for a VA manual underwrite, they should be good.
Just curious.
Yeah.
What is the lowest credit score you've ever seen?
Yes. Well, I've ever seen, oh, it's been a four, the smallest one I've seen was a 435. And that was, I don't think they paid anything on time ever in history. Because that's just bad.
Is that worse than no credit?
Yes. Yes.
Is
No,
it
no
worse
credit
than
is way
bad?
better.
Okay.
Yes. No credit is way better than bad credit. Yeah, because there's certain criteria now when it comes to having no credit that, okay, can we show other types of non-traditional lines of credit? You know, whether it be rent, whether it would be you're paying your utility bills on time. We can find other forms of non-traditional trade lines that we can possibly use to help qualify you, as opposed to it's on there, you ain't paying bleepity bleep right on time, right? So yeah, but absolutely. And then what else was I gonna do? There was one other thing I wanted to chat on. Let's see. Okay, we went over the residual income, we went over VA manual underwrites, all those. Okay, I think we did hit everything that I wanted to make sure. So, but anytime you guys have questions for clients that are or veterans, let them to know what their options are, what they could possibly qualify for. You know, even if somebody has told them no, let's figure out why first, not just, you know, just dismiss them. Because if they're willing to be engaged with you and help, you know, that's what I tell a lot of my clients. If they help me help them, we'll get them squared away and try to get it figured out. So we just want to make sure that we're going to just take a look at everything, make sure this is the right program for them. If they have everything that's lined up to get approved for it, we'll figure out if it's not, why. If not, if it's good, we'll just get it done. Okay. So let me stop sharing here real quick so I can make sure. I hit the stop share button. Wait a minute. There it is. Okay. All right, guys. So anybody else? Let me make sure I'm not missing any messages. Online. Okay. Anybody have any questions at all before we end, you know, today's session? Anything at all? If not, that's okay. If you guys, like I mentioned, if you have any situations or questions on VA loans or clients that may be wanting to qualify for them, let me know. I'd be happy to help them, and then we'll get them all squared away. But thank you guys for joining today. I really appreciate that. Thank you for your time, and looking forward to the next one.
Thank you.
Yeah, you're welcome. Somebody wants to go back and listen.
Okay.
Yes,
So
go
what
ahead.
do you think of Veterans United? Like I have a buyer that just came pre-approved through them and I've never used
Okay.
them. So
Yeah. Okay, when you're dealing with like the Veterans United, sometimes they have certain criteria that is what they call overlays that are separate from what the VA says is required. So just be careful. You know, I would never ever, you know, badmouth another lender or any institution or anything like that, because this is the nature of the business that we're in. But one thing to let them know, and this is just as informational, is they may have certain criteria that they may want met that, you know, they may not need to, you know, for just to be approved for some financing. So, but you know, those types of, you know, lenders that are out there, you have like the Navy Federal credit unions, you've got the Navy National, all those kinds of places are good, but you know, it just really depends on what their model is and what their overlays are. Like CrossCountry doesn't have any extra overlays on any of our VA loan products. That's what's nice. So whatever comes on when we run findings, it says, hey, we need pay stubs, W-2s, tax returns, bank statements. If that's all it says, then that's all we're doing. We're not going to add in, oh yeah, well, I need to see X, B, and C document too in order to approve this. So just be mindful of that. And if you see any resistance on that and you start to see things taking a little bit too long for that to close and without you getting any answers or updates, there's probably an issue. And that's when you need to let me know.
okay. Are there like appraisals more strict and stuff too, or no?
Well, I mean, that's another good question too. You know, basically when the VA orders the appraisal, because everything is done through the VA portal. So depending upon if that particular lender has any certain requirements that they built into what they want for their appraisals, like we just go off of what Fannie and Freddie require. We don't have any overlays on our appraisals either. So, and certain banks may have criteria that they want the comps to be X amount of miles away from the subject property, as opposed to if you find a comp that's maybe a mile and a half, they may not want to take that. They want to say, hey, no, our parameters are within 1 mile. And if you can't find it, don't use that comp. So there are a lot of, lenders that are out there that do have certain criteria in that regard. So just be mindful of that as well. But yes, it could, affect the appraisal.
Okay. Thank you. I
Yeah, you're
appreciate it.
welcome. Yeah, no problem. Great question. Anybody else have any questions? Okay. All right, guys. If not, I'm looking forward to our next class. I know next class we're going to do, and we were going to do one on, I think we're going to really focus on down payment assistance. I wanted to do a different topic for next month, but I'm like, I've gotten so many text messages and some email requests on down payment assistance programs. So I think we're going to focus on that one for next month, for March. It's going to be great. We're going to go all over the different things, plus the new OFA updates, and how they changed, some things. So, definitely try to stay tuned in for next month's class. It'll be at the end of the month as well. So, but all right, guys, thank you for joining. You guys have a